Welcome everyone to today's webinar organized by Cleanwatts called The Power of Local Energy Sharing and Market-Based Solutions to Grid Congestion. I will moderate this webinar, and I'm Michael Villa, the Executive Director of smartEn, Smart Energy Europe, which is a European business organization of the flexible demand management industry. And Cleanwatts and Nodes are both members of our association, which is indeed gathering a growing number of companies that are both technology and service providers that can help consumers of all types to activate their flexibility and interact with the energy system that they are connected to. Today, we are going to have a specific exchange and deep dive on local initiative, and in particular energy sharing. You might know that the right of energy sharing is now a specific new right set and defined by European laws, in particular in the revision of the electricity market design that was agreed last year. And we would like to see and explore how energy sharing could be used for a specific systemic challenge, how to solve a specific systemic challenge, which are local congestions. We know that congestions due to an increased electrification are going to become major barriers that distribution system operators will need to face. And we're going to explore how energy sharing and other type of local initiatives, including energy communities, could help solve these systemic challenges. As smartEn, we developed 2 years ago a specific concept, which is also underpinning specific business models, which is called district self-balancing. The name has two major components: the district dimension, so indeed a local dimension, notably within a DSO area, and which involves different consumers, which can be households, but also small and medium industries and electric vehicles. And the self-balancing dimension instead is this capability of all these participants to these community or energy sharing schemes to self-balance their generation, their consumption, and their storage in a way that is supported by specific market players, like, for example, Cleanwatts. And this self-balancing of the districts where there are indeed a different set of consumers should be done in a way that is supporting instead of creating more congestions to the distribution system operators. So we are gonna now have a workshop, a webinar, which is gonna investigate about these potential, these evolutions. And we have two speakers. We have Aron Lazarchick from Cleanwatts, who is going to present how energy communities and how energy sharing is happening both in Portugal and in the UK, which is specifically investigating how energy sharing can indeed support distribution system operators to solve local congestion. And then we are going to have Baily from Nodes, who is also going to explain how Nodes help DSO solve congestion in a market-based way through local flexibility markets, and how local flexibility markets and energy communities can coexist and can mutually reinforce each other's. After this presentation by Aron and Neil, we will have a Q&A session, so participants are very much encouraged to ask questions to the panelists by using the Q&A feature that you can find on the top of your screen. Having said that, let's deep dive into the discussion and let's indeed complement this narrative with some examples, as I was mentioning in Poland and the UK. So I'm very happy to give the floor to Aron from Cleanwatts. Aron, over to you.
Thank you very much. Let's hopefully see if this button works. Looks like the slides are popping up. Okay, looks like it worked. Perfect. Hopefully we can see them. So yes, thank you very much. And I suppose I'll just jump into it. So maybe I can preface with this idea that continuing what Mikkel was saying, this idea that I mean, electricity generation needs to triple by 2050 if we're going to, meet this 1.5 degree scenario. This is data from ARENA, and I mean, the broad question from that is, we also need to triple the amount of grid infrastructure, and hopefully not, but essentially to what degree we don't need to triple the grid infrastructure, I think is still an open question. And I mean, essentially something we seek to answer, with this discussion, or at least start moving in that direction. So one of the statistics from Bloomberg, this is globally, but if I go back to that number of essentially tripling the grid infrastructure, something like $21 trillion dollars needs to be invested in grids by 2050 if we're going to support that, this trajectory of hitting net zero. And this is a really big number, and I think we're in a certain sense at the beginning of this, but that's at least a kind of an idea of like, okay, well, like if I'm able to stop all the grid infrastructure from being built, that's maybe the value of that. And certainly I expect there to need to be additional grid infrastructure built, but possibly not $21 trillion worth, $21.4 trillion. So so then again, what's the question is, how do we mean to accomplish that? And I would say, just take it back a step, the growth of distributed energy resources, solar, wind, all these resources we're talking about, it's for sure, it's very clearly now, there's no question, this is an unstoppable force. The price of these assets is lower than anything we've experienced before. It's getting lower. So, the economics very much support this, this business model. And essentially, solar, wind, there's zero marginal cost energy. That's wonderful. Energy is becoming cheaper, or at least it should be. But in fact, the cost of grid energy is getting more expensive, and a lot of that reason is because of the need to invest in the grid infrastructure. So how do we counteract that force? So, as Mikkel mentioned, I wanted to start. Cleanwatts is a Portuguese-based company. I want to start with the concept of energy sharing, energy communities in Portugal, because I think it's a very interesting, let's say, use case, or how it works is very interesting. So, high level, within a 2-kilometer radius, I'm able to do what's called collective self-consumption and share energy. And the members of that community do not need to pay high and medium voltage grid fees. You're only paying for the grid that you're using, which is great, because in reality, the laws of physics, the laws of physics dictate that if you're producing and consuming energy within that area, path of least resistance, that's actually what's literally happening. So essentially, paying high voltage grid fees in this case is a fiction, in the sense that you're not actually using that grid. So this model, what I really like about it is that it provides a positive business case for energy communities. It's cheaper to share that energy locally, and therefore it makes sense for that. It's not a perfect model, in the sense that Portugal is a little bit late to the game in terms of energy flexibility markets and these kinds of things. So despite the fact that I'm able to have a business case for local energy sharing, I'm not able to really achieve that district self-balancing that Mikkel was mentioning. That's coming even next year. We're getting those markets are starting to open up. So I'm very much looking forward to being able to do that and essentially combine both things. But I just wanted to point out the Portuguese model is very, very powerful in terms of making local energy sharing makes sense economically using market forces and also the laws of physics. So just really briefly, how it works in Portugal, or how the Portuguese model works, or how it works with Cleanwatts. How do we make money? We tend to have what we call an anchor client, a central place where we overbuild the PV, and basically from that, because of the economics of scale, it's more valuable to have a PV, rooftop PV, than it would be just to do self-consumption. And essentially, I'm providing a source of income, and I'm bringing members, community members, to join and consume that energy. They're getting cheaper energy, cheaper clean energy, and the rooftop owner is also getting cheaper clean energy. And basically, we have a platform that allows for all the accounting for and essentially dispatching of devices in order to accomplish this. And that brings us to the UK, and this is why I invited Nodes here, is that we're doing a project together with the Northern Power Grid, where essentially we're doing energy sharing project, or peer-to-peer legislation is still not yet active in the UK, but we're doing the best we can to do a kind of a district self-balancing using the mechanisms we have in order to essentially balance that energy and do what we can to reduce congestion. And that's the goal of the project, is to be able to prove that I can have lower grid costs and essentially expand the project. So this is a really high-level view of the architecture, and one of the main mechanisms we'll be using in order to essentially compensate that is Nodes, which is going to be essentially participating in the market with the dispatchability of the assets. So just really high level. Neil will go into more detail about, let's say, how that works, and then maybe finally just a little bit of one of the mechanisms that we're at this stage considering is this concept of a daily allowance, or I could more accurately describe it as daily peak allowance, where in absence of actual peer-to-peer legislation, what we're going to try to accomplish is this idea of, during peak times, having households that are using more energy have a kind of a cap on the amount of electricity you can consume during a given time, and then the ability to essentially, on an accounting level, transfer that to people, either if you're using too much, to be curtailed, and to be kind of let's say have a monetary let's say loss aversion, where we're going to be giving them a stipend every month, or if you're using less energy, to essentially get bonuses from this. And the basic premise is to attach those transactions and use that to reduce grid congestion. So that's the part of my intro, and I will hand it over to you, Neil.
Thanks, Aron. Sorry, do you mind going back to your slide 6, just so I can add a bit more context, because it's quite a good slide. And just to explain a bit about this project, this demonstration project. It's a trial. It's funded by Ofgem, and the basic notion is that we've got to engage more with communities. Now, having big energy companies telling people what to do doesn't work that well. The only way to get any response is to try and get some price points put in front of them and see whether they change behaviors or allow their technology to be used by collective systems. What this does, if you look at the flow, it first of all looks at the grid, and it tries to optimize energy flows within the grid. That's SMP Net's part to this. So they'll first look at how substations are used, see if they can optimize there. But in doing so, they'll collect more information and find out where all the hotspots are in the substations. So then they'll tell us, they're acting on behalf, in this case, of Northern Power Grid. They'll say, this is when we need to buy flexibility, because this is when these peak periods are. Nodes then kicks in the market and engages with Cleanwatts and EV Energy, but also the communities. There's 3 communities. So we're we're using these communities to talk to the occupants of those communities to say, look, this is what we want to do. We want to decarbonize, the area, and doing so, we want to use these various technologies, but we also want to understand what it takes for you to do something different than what you do now, and that will be a part of the system. So there's human behavior element rather as well as technology. Sorry, Aaron, I just thought I'd add that to the context. Now, we'll move to our nodes. This is how nodes envisages, looks at how the value chain works. So you've got the TSO and the DSO. At this point in the UK, that they've got different requirements, but we need to look at that and the conflicts or the primacy issues that relate to those two, asking for different things at different times, and then how that works actually in the market. Node sits right in the middle between the buyers and sellers. It brings buyers and sellers together, but what it does is it was born out of the rapid electrification in Norway, and Microsoft got together with Nodes at the time and developed some trading software that looked specifically at local congestion and how to resolve it. So it looked at several products, which I'll talk about later, but booking capacity to say, look, in 6 months' time, I think I may have a problem, but within a week before that event, it also then updates that and say, well, I've got less of a problem or more of a problem, and looks to buy flexibility according to the size of that problem. Nodes then engages with the FSPs, where they've aggregated the various assets that sits underneath them. So that's basically how we look at the digital value chain. Flexibility is offered from the bottom up, but bought from the top down. Next slide, please, Aaron. For a market to work, our ultimate goal is to get a very fungible, deeply liquid market, so that your bid-offer spreads are very thin, and the market's very active. But you need a rule book. You need a set of rules for that, for people to understand what they need to do to engage. So we'll generally design a rule book depending on a specific market, but we start with a framework. And this is basically just a flag to say that, when you consider flexibility, you need to consider how those products within that specific market will be traded. The idea is to have as much commonality throughout Europe as possible, so you don't have too many differences. But nevertheless, this is a discussion that needs to be had at the outset. Next one, please. Then you need to also agree, as part of that rule book, how you'll pay people, depending on how well they've delivered. How well they've delivered the flexibility across the time period that you've asked them to do it. You can't say, you can't have it binary, so if you don't deliver exactly what you said, you don't get paid. You have to have some sort of sliding scale of incentives, and that these are the settlement rules that are also agreed. Next slide, please. Once we've done that, we then look at the local system, and we create topography. We create a map of what the local system looks like, and that's creating the grid nodes itself, so that we know where the congestion is. And the reason for doing this is quite logical when you think about it. We've got congestion here, so we need to buy flexibility underneath that point. It's no good buying it adjacent to it or above it, and hence creating a map of grid nodes. Next one, please. Not many more now. Once we've done that, we then ask people to register their assets. So they register the assets that sits under those grid nodes, so they'll know that they'll be relevant to those particular areas. And then those assets are sent to the DSO, which I think is the next slide, Aaron, maybe not, who then approve the assets to say, yep, that's a suitable, flexible asset. We're happy with that. We're happy with the information you've given, and then the system is set up. In terms of products, just a couple more slides. Aaron, next slide, is that people then will assign a number of assets, because they'll build up flexible capacity based on a number of smaller flex assets. So they assign the assets then to the portfolios. So the buyer of that flexibility from the outset will know how much capacity there is. They won't know specifically what those assets are until the trade's been committed to. Next slide, please. what generally happens, I always use this as an example, in lots of it, you get the DSO saying, I need to buy 5 megawatt or whatever of flex during these winter periods. You might get an industrial user, someone like AstraZeneca, for example, that's able to switch large volumes of power off without really affecting their process. But they will then generally offer into that long flex market. So 6 months away, they'll say, I'll offer you 5 megawatts of capacity, for example, in October during those time periods. And they get paid for their availability, for offering that product. Then if we go on to the next slide, Aron, we move into this is an interim stage. Another product is saying to people, could you guarantee not to use more than a certain amount at a certain time? So rather than offering flexibility, if you're an industrial user that's got, say, a 10 MVA capacity, we might be asking you to use no more than 5 MVA during a certain period. So you're not actually turning down, you're just agreeing not to use more. It's a sort of, it's a middle product. The final one, Aron, is we move into the short flex market. So within a week, let's say 7 days of the flex being required, we also publish prices and update it. And that allows the more community-based, the shorter-term flex, the EVs of the world, the Cleanwatts of the world, to look in, because they know actually what they can access much nearer to the point of use. They'll then come into the market and offer prices for utilization. And that generally kicks out the long flex product, who's been paid anyway to stand by and aren't really that bothered about offering flex. And the shorter flex, this is where the liquidity kicks in, it takes over generally. And so the idea of the platform is to try and encourage this actively traded market. That's it. Thank you from me.
Thanks, both of you, and indeed, let's try to indeed deep dive a bit more into this specific UK project that builds indeed on the expertise of nodes across Europe and also beyond, and also the expertise of Cleanwatts from Portugal, but that further expand in order to address this major evolution, which is using collectives to tackle the grid congestions. So the first question that I have is in specifically this UK project with MPG, there are a lot of players. So it's not only nodes and Cleanwatts and MPG. How did you manage to create this consortium among these players and to create indeed a business value chain that is solid enough? Who was the driving force?
Aron, do you want me to take that?
So this is organized by, or let's say the project manager of this is Electric Places, and Cleanwatts actually did a successful innovation project with them called Flex Unity, wrapped up I think last year, and that was essentially an innovation project tackling energy sharing in Spain, Portugal, as well as in the UK. And so that's essentially how we got to know everybody. And then NPG put out this call for the Community DSO project. And I would argue, like, it's certainly not an innovation project, but it's kind of in between an actual commercial project and an innovation project, in the sense that we're still essentially testing hypotheses, but there's kind of real money, and it's private money behind it, in the sense that we're solving a real business need. It's very clear, which is nice. So I would say very, very successful from the perspective of innovation projects, that it's evolved directly into a project like this. And then essentially Electric Places put together the consortium, and thanks to their success with us on a prior, not exactly the same, but similar project, they've invited Cleanwatts to join. Do you have something else to add to that, Neil?
Well, yeah, I would just say, in all honesty, it was chaos to start with. So MPG had two consultants saying, look, we need to test these concepts. Let's submit it to Ofgem, and Ofgem approved it. The funding was granted. now MPG then needed to get all these different companies together. So they held the first presentation, which was in June 24, and they really created what was like a speed dating process. They put all these people in a room, told them what it was, and then said, get to know each other quickly. And we had to whiz around, and I remember being there looking, well, who would be an ideal, makeup for this consortium? And it was just a case of people talking to each other. They threw everyone in the room, and that took a while. That took months, really, for people to really get to know and whether they could come up with some synergies between the various consortiums. But that's how they did it. I'm not sure whether it could be done any better if they did it again. I mean, you're just bringing together lots of different businesses with lots of different things that they offer, and they knew they needed what was key. They needed energy communities, and they needed good energy communities that understood what this was all about. But they needed the technology providers to sit above them, and that's how it happened.
Which is indeed a very fundamental aspect of these developments that I would indeed like to attract the attention, because indeed we have a system operators that is in this case the initiator or has a specific reason to ask for the support of market players to solve indeed a systemic challenge. And I would like to better understand what is the reason that is actually incentivizing or motivating MPG to do that.
Well, it's two things, I would say. Aron, feel free to chip in. Without this, it's impossible to get to their decarbonisation, targets. They cannot put enough wires in the ground to meet the projected needs. So something has to change. That's fundamental. And they're beginning to realise that. More and more communities, energy companies are beginning to realise that. No longer can they just put more wires in the ground because there isn't that central generation capacity. There isn't that sufficient baseline generation. Something has to change. So it's a radical change, and Ofgem are driving this. In fact, Ofgem often say, if someone came up with long duration energy storage that was large enough and centrally dispatchable, we wouldn't need to do any of this, but that's clearly not available. So they've realized that it's all about decentralization, engaging with local communities. So it was a cost and it was a necessity. They need people they can't have everyone 6 o'clock at night switching on their heat pumps and charging their vehicles. Something's got to change, and this is a trial to see how we can change that.
Exactly, and indeed, I would indeed also highlight the support of the NRA. Of Ofgem, also in motivating the system operators and incentivizing them and providing also the adequate financing support and remuneration mechanism for them to operate through an OPEX approach to use in a better way the existing grids to reduce the total cost of the system. So that's a major aspect that needs to be highlighted. And I would say that the UK is going in the right direction in that sense. In the EU, strictly in the strictly geographical scope, also the Netherlands are going in that sense, exploring how communities could be used by system operators, DSO, to solve local congestion. But there is missing the remuneration to the market player, and also there is a lack of a trading platform that, like the one that NODE is setting up, for an adequate remuneration for the market players that can help set up this district balancing mechanism. Why it's extremely important for you to have a remuneration for that?
Well, without the price signal in place, I use the example in Norway that they're probably 10 years ahead, let's say, with some of the apps they use and some of their understanding. So when they 80% of vehicles being purchased now are EVs. So they get it. They plug in their EV and then they give up the charging regime over to the company that charges it, and they make decisions on their behalf. So we need to get people to understand the time-based value of electricity, and this is a start of that. First of all, you explain the problem and you make sure people understand it, and then you test various products, flexibility products and price points to see what it takes to get people to change behaviors. Or, an example, talking with the consultants just recently, they said people will put PV panels on their roof. All that's doing is increasing the amount of intermittency. What we need is solar panels plus batteries, and then the battery part of it is where they can start selling electricity at different times and really making the difference. So it's changing that perception of renewable energy and how it's used as well.
Yeah. And the cooperation between, indeed, specifically nodes and Cleanwatts is extremely important to give from nodes parts the signals to a community managed by Cleanwatts in order to have that signals that are market-based signals based on the needs of the system operators to then activate the different flexibility and decentralized energy resources that Cleanwatts is managing. But going on and exploring these aspects, Aron, which are the assets that could be part of this community which can support DSO in solving local congestions?
Certainly. We're focusing mostly on batteries, as well as we're discussing probably heat pump activation. In this case, EV Energy is going to be managing EVs. They already have a active platform in the UK, so we're really happy about that. And let's say, in addition, we're also discussing, because we have the app interface, kind of back to this daily peak allowance, where seeing what kind of engagement signals we can get to have people shifting their use. So kind of in the background, automatically, obviously batteries, heat pumps, EVs, and then potentially as well, let's say for people that aren't owners of these assets, and this is one of the important aspects of kind of energy communities, or this concept of local energy sharing, is how do we make the energy transition more inclusive for people who don't have access to this? It's very clear to anyone who's paying attention. The reason that grid fees are raising is because of people who are adding heat pumps and are adding EVs and are essentially more, maybe potentially more wealthy people can afford this infrastructure. And so people who don't have that stuff are still paying kind of higher grid fees, right? And so how do we also use the tools we have available to bring them into the energy transition and to essentially make it a bit more equitable? Because it's obviously very important to do that and bring everybody along. So that's the plan. We do have other projects in Sweden where we're going to be doing like appliance activation and this kind of thing, but it's obviously the more appliances you get into, and it can be very, very complicated. So as this is a sort of first of its kind project, we'll try to keep it simple and the ability to really test the hypotheses we're trying to test.
Thanks. So indeed, there is also an affordability element in the value proposition of these models on top of the systemic challenge that this model can solve. But indeed, you are talking about storage, different decentralized energy resources. And if you are looking indeed at the combining these elements with the affordability angle, then a logical question will be, how would households afford for the deployment and installation of these solutions? So what's the model, the business model behind that?
Sure, it's a really good point. So essentially, the Ofgem MPG is giving us a kind of a pool of money to basically incentivize people just to join, because obviously you want to be offering something to be treating people not as lab rats, but in a test, and hopefully not annoying them and hopefully bringing value to them. But so we have a certain amount of let's say money budgeted to that, and we're looking at roughly around £20 a month. And ideally, obviously, as Neil showed all the different business models, a lot of that is going to be coming from the ability to dispatch assets and to, essentially trade them. And then in addition, I think the major outcome of this is how do I prove that I'm reducing congestion? How do I find the value of that from all the accounting that's going to be taking place after the fact, after I show, the consumption, shifting time to when it's not needed, and then for sure it's not $21 trillion, but there is that value there of reducing the infrastructure upgrades and putting in a new transformer and all this stuff. And so that, we're at the very beginning of this, so I obviously don't have a number in front of me, but the point is to, one of the strong points of Cleanwatts platform is all the accounting that we do in terms of, energy flows in a given geographic area. And so to essentially prove the value of that at the end of this trial.
I would add, Michael, if I may, that and this was MPG saying during the build-up before the award, they need to radically change the way that they assess connection capacity under a particular substation. For example, they will look at the worst possible scenario now. So if someone goes along and say, can I connect a wind turbine, for example, they'll say no, because our calculations show that you'll exceed our headroom during the worst possible time and the worst possible event. That all needs to change. And they were saying they prepared for this trial to test that and to the extent that how they can change their calculations. So they could get to a point where they have a 5 MVA substation, but they're allowing 7 MVA to be connected underneath it, because they know, based on these trials and demonstrations and how systems work, that they'll never exceed the 5 megawatt. So there's another aspect to this, and it's about design criteria and just basically getting the engineers to understand how well flexibility can work as opposed to the traditional evaluations.
Good. Maybe building on your replies, I mean, I would like to stress maybe 2 elements. So the first one is that there should be a sort of a flexibility support scheme to indeed support also the financing for the deployment of some assets, but also relying on those assets that are already deployed in the different households and participants of the community, so that can be managed thanks to Cleanwatts. And then also the need to really quantify, measure, and valorize the savings that could be achieved through these aspects. And we, as smartEn, we calculated that DSOs in Europe in 2030, if they adopt an optimized management of the existing grids thanks to flexible demand, they will be able to save annually between 11 and 30 billions, which are indeed major figures if we indeed consider the figures that instead Aron presented at the very beginning. These are all savings for a cost-efficient or a reduction of the total system costs if we are engaging individuals or communities to support systemic challenges. But to do that, communities, in the way that we are currently exploring, are a way. But Neil, there are also other opportunities like local flexibility markets that could bypass a community, or also flexible connection agreements. So there is a multiplicity of tools that can contribute to that objective of optimizing and reducing the systemic challenges and cost for the operation of DSOs. So what's the relation between all these opportunities? And do you think that DSO are all aware of these tools and how they could interact?
Some DSOs, some people in some DSOs are aware, but generally the mindset is very nervous, very risk adverse, which they have to be. They have to protect the grid. So I completely understand it. But another project, I give this as an example I was recently connected with. It was new housing development that was, say, 10,000 homes, that they calculated that the maximum demand would be 60 MVA, but we looked at a 60 megawatt. But if we converted it to a smart grid and utilized everything and fed in all the information that we knew to be relevant today, we'd only need a 35 megawatt connection. And so we spoke to the DSO and said, look, okay, under traditional calculations, 60, but under the real world, as we all know how it operates, they'll never exceed 35. And they're still shaking at that thought of offering, because 35 they can offer. The higher one, they're very they're unable to supply that capacity, so the housing development won't take place. But so it's more of a case of proving it on a small scale, proving it on a larger scale by incorporating more and more markets, as you say, building it in, and then building that into the design calculations initially. And that's the challenge that we're all engaged with, I would say.
Which I think will be the ideal and optimal approach in order to then have a solid foundation that could be replicated across Europe, because indeed you will not be happy and satisfied in having only one project in MPG in UK, but ideally to be replicated across Europe. So what's your vision, both from Nodes and Cleanwatts? What is needed to have an harmonized approach of this model across Europe?
Maybe I can take this one, and obviously this probably goes back to my original presentation regarding local energy sharing. I would say that's the most challenging aspect of this, is that essentially I'm trying to do district self-balancing. I'm trying to do essentially energy sharing, but I have to make up mechanisms, or I have to really search every possible value chain in order to make it make financial sense. When, as I mentioned, we really do have, not perfect, because I don't really have the active flexibility markets yet in Portugal, but I do have really good legislation for doing local energy sharing based on market principles that has a lot of opportunity to reduce grid congestion. And, there's a positive business case for energy sharing. And in countries where you don't have this grid fees reduction, essentially, you can do energy sharing, or you can just sell your energy back to the wholesale markets. And why go through all the extra challenge of selling it locally if it's, if there's no real market benefit from that? So I think we have a really clear incentive in order to do local energy sharing, which again, as I mentioned, follows the laws of physics, which is super convenient, because the laws of physics, they're really important. And as Neil mentioned, I can certainly understand energy markets or energy infrastructure. Like, this is critical infrastructure we're talking about. So we absolutely cannot take any risks which would lead to any kind of catastrophic event. Or I can imagine how grid operators and DSOs are really conservative. But on the other hand, we do have really clear examples of Portugal. Like, there's no catastrophe has happened here from local energy sharing. In fact, the opposite is true. And it's like, historically, in order to make money in energy, you needed to up until this point, it's like building really big infrastructure projects, either energy production or grid or building out the grid. Like, this is essentially the way to solve the electricity system. But obviously that's all changing, and we're moving to distributed energy resources, and now we're moving to the fact that it's just not possible to build more grid, or it's obviously going to be a waste of money in a lot of circumstances, considering the tools we now have available to us.
Very good. So indeed, I understand that at the moment you are adapting to the different conditions in the different member states and exploring what is currently possible. But ideally, in the future, we will be able to adapt that schemes across Europe, because you will not have barriers depending on the geographical location, so that this model could be indeed applied in an harmonized way across Europe. Europe. I would like to ask you, because I don't see questions from the audience, so I would like to ask you, both of you, to maybe come with some concluding remarks and some expectations about the results of these innovation projects and next steps. So Neil, maybe.
Sure. Well, I've been involved in quite a few for a number of years now, so I can see the change. You can get to certain points and you think, well, we're fighting an uphill battle here, but it's happening. More people are getting on board. More money is being put into this space, so it's all positive. It just never happens as quick as we'd like it to, and that's probably for good reason. The other thing I would say is the energy supply companies are actually now starting to think about the role they play. I mean, they could quite easily, for example, the flexibility, as some are trying to step into that space and offer different products. But they've always managed their portfolio by being able to predict the winter shape. They look forward, they hedge 80% of what they need, and then they get nearer time and risk manage the rest of the portfolio. Flexibility creates a big problem because it creates lots of unknowns. So we're going to see that, I think, over the next 5 years. Energy supply companies discussing and wondering what their role will be to play in this new world that they can't stop, it's happening, but how they actually have to structurally change their businesses, and whether then companies like Nodes exist on their own or incorporated into the supply chain in a slightly different way. Well, I think that's an open question, but I can certainly see various scenarios playing out.
Very good. New innovation, business evolution, acquisitions, that's a scenario that we will face very rapidly, because this is just going to happen very quickly, and solutions needs to be deployed at the same path. Aron.
Sure. I wanted basically to point to all the discussions I have with people in the energy industry is I feel like the roadmap to where we're trying to get in terms of product is actually pretty clear. We all pretty much know what we're building, within reason. Let's say there's for sure some open questions, but it's really the kind of regulatory challenges and the kind of the waiting in order to get there. On the other hand, like I said, like the sort of the answer we're seeking for is like relatively clear. Already, prices of solar and batteries combined is like cheaper than any source of energy. Obviously doesn't work, in winter time in the far north and these kinds of things. But we have plenty of solutions to work around that. Price of solar is expected to drop in half in the next couple of years because of perovskite. Price of batteries, spot price of lithium ion batteries in China is now €50 per kilowatt hour. So prices are in the next year or 2 or 3 are just like dropping out so rapidly, and I think normal people don't see this coming. Like there's no question. It's like nuclear, nothing wrong with nuclear, but like come on, it's like just really expensive compared to what we're talking about. Not that it won't be useful in some circumstances, but so I feel like we have a very clear, thought-out roadmap of where we're trying to get. Technology, prices, and is adopting really pretty rapidly. So change is coming. Slow thing is regulation. Again, heavily regulated, slow-moving, conservative industry, electricity. So we just need to adapt. There still needs to be some testing of things because it's critical infrastructure. But I'm not worried that we're going to get there because it's a very obvious, clear answer. Same with local energy sharing. It's a great idea. Certainly in some circumstances, it's going to happen. So that's where we're going to go.
Very good. Thanks. Sorry,
well,
Neil.
There's one thing that we haven't mentioned, and one thing that everyone seems to mention is peer-to-peer trading. Having that blockchain technology in place so that one occupant, one household, one business can sell to a neighboring business, and it's a subject for another day. I realize that, and the regulatory framework in the UK doesn't allow for peer-to-peer trading. The electrons may go next door, but we need to change it so that more electrons flow locally rather than out of the grid. And peer-to-peer trading will be a thing that will be talked about more and more over the coming years, I'm sure.
For sure.
Exactly. And indeed, a European Union priority for the next 5 years will be an electrification action plan. So indeed, to boost for electrification, to support the decarbonization goal, but we needed to make sure that this electrification is a smart one. And so it's done in a smart way. Otherwise, if we are simply electrifying consumption, which is going to create a problem. So we needed to have a smart electrification of end users, a smart deployment of also on-site renewable generation and development of prosumer business models, but in a way that either individually consumers or collectively through communities can support the cost-effective integration of more variable renewable generation and support congestion balancing issues that will simply increase in the years to come. So I want to thank you once again for your participation and for the two excellent speakers from Cleanwatts and Nodes, Aron and Neil. More information, I'm sure, will be provided by both of them on the developments of these innovation projects with NPG in the UK, and we are all looking forward to know more about that in view of replication of the optimal results across Europe. Thanks a lot for your participation, and have a good continuation of the day.
Thank you so much.
Thank you.
Bye, everybody.